a massive new bill has just become law. And honestly, it's set to change the way we all think about taxes and government spending. So the big question is, what's actually inside the One Big Beautiful Bill Act? Well, that's what we're here to do. We're going to break down exactly how it affects your money, the broader economy, and really the country's financial future. So here's our roadmap for today. First, we're going to tackle the big picture tax changes. Then we'll zoom right in on what this means for your personal finances. After that, we'll shift gears to look at businesses, then the national debt, which is a big one, and finally some major policy shifts you might not have heard about. All right, first up, the new tax framework. Probably the single biggest thing this bill does is take those temporary tax cuts from 2017 and makes them permanent. It basically locks them in for good, creating a whole new foundation for our tax system. And here's why this is such a big deal. Those lower rates were all set to expire at the end of 2025. Without this bill, millions of people would have woken up to a tax hike overnight. We're talking about the 12% bracket snapping back to 15%, and that top rate jumping from 37% all the way up to almost 40%. This bill basically prevents that giant tax cliff from happening. Experts are pointing out that by making these tax rates permanent, the bill gives everyone something they haven't really had in a while: certainty. For the first time in years, you can actually make long-term plans for your savings and investments without constantly wondering if the tax rules are about to get flipped on their head. Okay, so that's the big picture. Now let's get into the details that hit a little closer to home, your personal finances. This is where we'll look at the key changes to deductions and savings that you're probably going to want to know about. One of the main ways this bill lowers taxes for a lot of people is through the standard deduction. Not only is the higher amount now permanent, but it's been increased even more. For millions of us, this just means filing taxes gets simpler and you get a bigger tax break right off the top. No messy itemizing required. And to put a real number on that, for 2025, the standard deduction for a single person is now set at $15,750, and that'll go up with inflation in the future. Oh, and for married couples filing jointly, that number more than doubles to $31,500. Now, for anyone who does still itemize, this next part is a huge deal. The cap on deducting your state and local taxes, the SALT deduction, it's been quadrupled. It's going from just $10,000 all the way up to $40,000 for most taxpayers. This is a massive, massive relief, especially if you're a homeowner in a high tax state. The bill also gives a big boost to families. First, it makes the $2,000 child tax credit permanent, stopping it from falling back to just $1,000. But then it goes a step further, increasing it to $2,200 and tying it to inflation, so its value doesn't get eroded over time. And this is fascinating. The bill introduces a brand new program, a government-seeded savings account for newborns. The government literally kicks in the first $1,000, then parents can add to it tax-deferred. It's a completely new approach designed to help build wealth for a child's future, for things like college or a down payment on a first home. So that's the story for individuals and families. But what about the other side of the coin? Let's switch gears and look at the business world. Because this bill is packed with incentives designed to get companies investing and hopefully hiring. Okay, so here's a quick look at the heavy hitters for businesses. We're seeing the return of 100% bonus depreciation, which is huge, plus immediate write-offs for R&D costs, and some key deductions for small and medium-sized businesses are now permanent. Let's just single out bonus depreciation for a second because it really is a game changer. It was supposed to be phasing out, but this bill yanks it right back to 100%. What that means is a business can go out, buy a big new piece of equipment, and deduct the entire cost from their taxes in that same year. It's just a giant green light for investment. And this next one, this is absolutely critical for small businesses. The 20% QBI deduction, which has been a lifeline for millions of what are called pass-through businesses, think LLCs, S-corps, that kind of thing, it was about to vanish. By making it permanent, this bill locks in a major tax break for a huge slice of the American economy. Okay, so with all of these tax cuts for people and businesses, you might be asking the obvious question: what does this do to the country's finances? So let's zoom out to that macro level and see what the impact is on federal spending, revenue, and of course, the national debt. So how is all of this being paid for? Well, according to official projections, it isn't. The bill is expected to add somewhere between $3 and $4 trillion to the national deficit over the next decade. To put it simply, the cost of all the tax cuts far outweighs any of the spending reductions in the bill. And this chart, wow, this really gets to the core of the bill's philosophy, the trade-offs. To help offset some of the cost of the tax cuts, the legislation makes cuts of over $1 trillion to social programs like Medicaid and SNAP. And at the very same time, it boosts spending on the military and border security by almost $150 billion. So to actually accommodate these projected deficits and, frankly, to prevent a potential government default, the bill had to include another major provision: increasing the nation's debt ceiling by $5 trillion. This is what allows the government to keep borrowing to meet all its obligations under this new financial setup. All right, for our final section, let's look beyond just the numbers and talk about the broader policy implications. This bill really signals a major shift in national priorities, especially in energy. And it's also really interesting to look at what didn't make it into the final version. In energy policy, this bill is a complete U-turn. It kills the popular $7,500 electric vehicle tax credit next year, and then it gets rid of most of the other clean energy incentives after 2025. And in their place, it actually creates new tax breaks specifically to boost coal, oil, and gas production. You know, it's also really important to see what didn't make the final cuts. There were two other huge proposals being debated. One was to completely eliminate federal taxes on Social Security income, and the other was to cut the corporate tax rate even further, down to 15%. Ultimately, neither of those made it into the law. So when you boil it all down, this bill permanently reshapes our tax system and reroutes national spending. And it leaves all of us with a really fundamental question. What is the long-term trade-off we're making for future economic growth and stability by making tax cuts permanent today while significantly increasing the national debt for tomorrow?